We've got two sides. At least someone seems to be looking for an off-ramp, depending on the noises and the signal that we interpret. So brace ourselves, there could be a buying opportunity here, Mark.
I actually think how Rick Reader's outlined it there is spot on, but I think it's important to take it fully in context. I think that when we're on the other side of this conflict, it will likely be a great buying opportunity. We talked a month ago on this show about how we had an extraordinarily bullish macro environment for stocks. That was the setup for the last few months before the conflict. But the conflict is real, and we're not at the other side. And as you just said, Tom, only one side's really looking for an off-ramp. I don't know how the conflict's going to play out, but all the news flow would suggest that the base case assumption, unless you have some inside loop on the talks, is that there's probably going to get worse before it gets better, which means I don't think we're at that buying opportunity yet because we have a lack of clarity. And in almost always in such scenarios, unless you're a very, very short-term trader, you're better off waiting till we know the problem's behind us and missing the first part of the bounce rather than trying to preempt it. You know, you go back to the GFC 2008, 2009. If you were trying to buy the whole way down in January, February, March 2009, you lost your career, you lost your job, you got stopped out. If you waited until May or June, you may have gone, oh no, I missed the first 10, 20, 30% of the bounce. Who cares? You had several hundreds % of upside in a one-way trade. And I think that's the way you've got to look at it. There is a lot of liquidity on the sidelines, as Rick Peter points out. When we get to the other side, if we get soon enough, it'll still be good. The problem is, what if we don't get to the other side of this conflict in the next month or two? Then the damage to growth is much more material. So I think how he's laid it out is right there, but I think it's important to emphasize not to preempt it.
Mark, as a mark of the risk aversion today, we've got gold down along with stock futures and Asian stocks already. What's your thinking on gold as a haven right now?
As you know, I think the gold, I turned bearish gold at the start of the month. As soon as we finish the invasion, that is an extremely bullish signal for dollar. So, you know, that on what happened at the start of the month, that's bad for gold. It's extremely inflationary. That means higher yields. That's bad for gold. And if people had bought gold because they're worried about a war in the Middle East, well, you just got your war in the Middle East, so you take profit in that trade. So as we've talked quite a bit, Lizzy, my view this month was to turn bearish gold at the start of the month, and I still think it's got more downside because the conflict is not over. And I don't think people will return to the bullish gold trade until those dynamics change. And until the conflict is over, we're going to continue to have strengthening dollar. We're going to continue to have a little bit of upward pressure in yields, at least for the moment, until we focus on the growth factor. And it's lost its kind of edge as a growth hedge. There's an extra dynamic as well. Central banks around the world, whether it's Poland or Turkey or others, are talking about potentially having to sell down their gold reserves they've accumulated to provide some kind of fiscal stimulus for their economies in various different ways, or to ameliorate the impact from energy. So, look, I still think gold's got a chunk more downside and won't turn positive until the conflict's over.